Welcome back to YourFinance TV, kicking off your work week. A lot of the world is closed for Easter Monday, but the US is open for business. And we're looking forward to what could be a very volatile week for markets, with some big data numbers coming out and earnings as well. We're going to dig into that for you. And once again, we bring back Brendan McCarty from Column E. How are you, Brendan? How was your Easter?
Oh, it was great. How about yours?
I ate way too much chocolate, and I don't think I need to see any chocolate again for quite a while.
I've had plenty of chocolate myself.
All right, before we kick off, don't forget to click on that subscribe button below and the like buttons. Numbers are growing every single week, so thank you for what you've done so far. We've had a relatively calm couple of weeks in the markets, but we should be getting ready to see the words volatility, CPI, inflation, and recession trending on Twitter this week. We have CPI and PPI data coming out, and throw in some big bank earnings on Friday morning from Wells Fargo, JP Morgan, and Citi. Brendan, are we looking at some volatility trades this week?
You know, it's funny. Overnight we've been watching the markets across like the most volatile instruments, and with Europe being closed, there hasn't been any action whatsoever. Like the volumes are small, the ranges are small. I mean, treasuries have barely moved. It makes you wonder if the U.S. is what's the right word? Can't be surprised anymore. Like it's all priced in around here. Whereas internationally, there is so much movement that when they're open, there's more uncertainty away from us, away from our shores, than here at our shores. I think ultimately what's going to come down to is what's priced in. My belief is with more money in the system, with the existing demand picture, you're going to find inflation perking up. Right now, everybody's looking for the CPI to move forward lower. So I'm guessing that if the market were to surprise on the CPI to the upside, you get a little movement. Otherwise, you may not get any movement on the CPI. Banks will be a very interesting picture because the regional banks have been they've been crashed. Let's just put it that way. They've seen their deposits flow out the door. But guess who's receiving all of them? The big banks who are reporting on Friday. So it could be a tale of two markets. I don't know, like I haven't looked at what earnings look like for those guys, for that group coming on Friday, or the expectations. But for the amount of money that they're coming in their doors, that they're earning on the spread. I mean, there was a article out this morning on reverse repos, which haven't really risen much, but people are attributing that to money markets for some reason. That's just they borrow at 4.5 and they like pay out or whatever higher, and they earn the difference or something like that. But in any event, I think this market's more about surprise than anything. I think the U.S. data is kind of priced in. So are we at the point where banks, SIVB and Signature were isolated? Maybe. We'll get more from, I think, PNC reports later this week, so that'll be a big one. But I don't know if there's going to be that much volatility this week. I think last year the markets tried to hold in through tax day, which is Friday, by the way, I think, right? 10, 12.
I think so, yeah.
It was a Friday, Monday. So that always is a little volatile ahead of it because people have to raise money for cash. But I think that's been done. I think people are just sort of sitting on the sidelines waiting. And if CPI comes in stronger, that will be a surprise. But I don't think it's going to. Right now, I don't think it will. I think it will in the next couple of months, but not now. And it's what the banks have to say. Jamie Dimon always has a quote or two. So I think the volatility is gone for another 5 days. I don't think it's here. Based on the overnight action, the U.S. investor is not trading. We all came back from Easter yesterday. We're all here. I know Europe is closed. I know Asia was sort of open. Asia was open. But Bitcoin, crypto hasn't moved. The S&Ps haven't moved until Japan's new BOG had started speaking. So I think it's going to be a quiet week right up to the banks. Unless CPI comes in stronger, we'll see.
Okay. All right. Last week, though, we saw oil production cut, which surprised markets, and the jump in prices at the pumps was just in time for the Easter weekend. After the initial spike on Monday, though, it didn't really move for the rest of the week. So where to now? From an RSI perspective, it is close to overbought and sitting above the 100-day moving average. Brendan, would you sell this move, or is this just the start of a move back up towards the $90 level?
I wouldn't say it's a move back to 90, but I wouldn't necessarily say it's going to go down. I think what happened down to 65 was a couple things. A, hedging a little bit drop in the economy, maybe driving demand. I think the winter hasn't been, I mean, it's been really cold. So driving demand may have backed off just a bit. And I think didn't it snow a ton? No, didn't it snow a bunch in February into March?
Oh, yes,
So
it did.
that could have put, and also you have natural gas sinking like crazy. So you had all these energy markets, negative factors, and then all of a sudden it went back to $80. $80 may be equilibrium. I think it's sort of like an equilibrium point. It's funny. We were looking at the XLE and crude at 65. I think it spent like 3 days there. It was on the chart, it looked wonderful on the chart, and then they both exploded off the lows. But if you were to look at what's driving this move, it's not the service companies, it's not the pipes, it's not the E&P, it's just the integrateds. So to me, that argues that, all right, we're not going really much higher, but the integrateds are selling more higher priced oil. So that's a little, I think basically what you saw was an overextended downside, go back to the middle. Equilibrium might be 76. So it might be 76 to 80 is where we ultimately reside. I don't see 90 at this point. There is the issues in Israel building right now in the Gaza again. I think if I read right, the missiles started was Israel and Lebanon were firing missiles at each other, and now Syria joined the fray last night. I don't know what war in Israel or that area will do to oil prices, because we just had a war in Russia, and we're staring at $80 a barrel. We're not staring at $200 a barrel like many people thought. So I wouldn't necessarily sell it. I think it'll probably moderate into a range. It'll probably sit between 76 and 80 until we get an idea. The money the Fed pumped in 2 weeks ago, 3 weeks ago, 4 weeks ago, that money is still sitting in the system. It is still earning income on the rate. The banks are making money on it. That's new money that's entering the system. People can say what they want about QE, but if QE is an overdrive, that is an asset that lifts assets. And that gave a boost to the crude market. It dropped the dollar. It gave a boost to gold. And so I think what you saw was a perfect storm last week or 2 weeks ago, where crude shot up from 65, stopped right at 80, which is the 13-month, incidentally. It's over the 65 week, but there's a big gap. And I had a client once say to me, gaps are meant to be filled. So I'm guessing that will fill its gap back into the 70s, and then it'll figure out what's next. I would watch this little war forming in Middle East. I don't know what's going to come of it. Nobody seems to be talking about it too much, but anytime there's hostilities, you got to keep an eye on it.
Yeah, there's definitely a bit more focus on China and Taiwan activities over the weekend.
Yeah,
so we'll see what comes from that. But
yeah.
BlackRock has their earnings released on Friday morning, and with an expected EPS of $7.90 per share. EPS estimates have been small revised lower by analysts going into these earnings, and with recession fears continuing to grow, would this be a sign of further downside for the BLK share price, which is down 7% year to date? Brendan, they have beat estimates in their last two earnings releases. Can they make it a hat trick?
I think it's more likely than not, in a way. I would say this: a couple weeks ago, we were talking about ETF closures rising. That means ETF demand on balance for the cool ETFs, if you will, the actives, is waning. BlackRock is all passive or largely passive, but they do have a big hedge fund complex. And there is massive fee compression going on in there, it seems, from what you read. My question is, could the ETF closures be a leading indicator for BlackRock later this year? And are like they reported, like they're expected to report like 90 billion in inflows this quarter versus only 22 billion last quarter. So that's positive income producing revenue. But there is fee compression going on elsewhere, so competition is heating up. I would also love to hear what their money market views are. They have money market instrument like ETFs. I mean, the SHY, I think it's the 2-year one, if I'm not mistaken, and that had a huge rally. So how many people piled into that thing? I would just say that I would say that the hat trick is in jeopardy, but that we had a good the markets were up last quarter. That means that's higher revenue for them to take in. But as we look at it's always about the outlook. It's always about, all right, where are flows going, where are ETFs going? I think it's priced in that they have a better earnings report but I don't know if it's priced in. Like the way the stock is trading, I would say that perhaps there's a little apprehension about the forward forecast. And I think that's what matters most. I mean, you can trade BlackRock strictly off the S&P. You can just follow if the S&P goes up, BlackRock's assets go up. If the S&P goes down, BlackRock's assets go down. And then you can just sort of figure out what their earnings are going to be. Well, since October quarter, we're higher. I think we're over 4,100, which I think is near the highs of the highs of this quarter. And they also have QQQ related assets, which, as we all know, the NASDAQ is up huge this year. So they're benefiting somewhere.
Yeah. Well, another interesting name, which we haven't looked at for a little while, is Delta Airlines. They've obviously just had a very busy weekend with all the Easter travel, and they will remain busy with their earnings coming out on Thursday morning, pre-market. Options are pricing in a 4.6% move after their earnings, but the share price has been known to move more than expected after earnings. Could higher oil prices impact guidance, or is that word recession going to creep in? Brendan, we've seen a decent sell-off in Delta's share price since early March. Are there too many headwinds ahead, or was this sell-off a buying opportunity?
So I was having an interesting conversation with my wife's aunt yesterday about the airlines. She says it's not the easiest getting from, let's just say, two busy airports, France and it was at Charles de Gaulle. Is that the airport in France?
Yep, Charles de Gaulle. Yeah.
To JFK in New York. It wasn't the easiest flight. She went through Dublin to get back here. It's the prices they are charging for certain flights are like way above everything, and we have been talking about higher. I mean, what is it? General Mills. Their revenues have been falling, but they continue to report higher earnings because they keep raising prices. Well, I think Delta and the airlines are largely in the same ship, unless you're Southwest, which has had a ton of trouble the last 6 months. But Delta, they've been raising fares like crazy, almost regularly, and the planes are packed. I think you told me you were flying, or maybe you weren't flying, but something like that. It's just anecdotally the demand is high, and right now analysts are looking for a 50% rise in revenues. I mean, when does the last time you ever heard that from an airline? Premium markets and overseas are driving the gains, which means the rest of the world might be waking up. So that would be a good, if you take that one piece alone, say, all right, well, if they say that's happening, well, that means the global economy is sort of waking up. Because in a way, if the global economy is waking up, people are transporting one way or the other, vacations, or even getting away from Zoom and going to a business meeting, if you will. The stock actually moved lower last week after a nice turn higher. That tells me that there's a little apprehension heading into earnings. The energy move also didn't help. There was no way they could have hedged that move. It occurred in 7 days. They probably, like, 1 minute they're staring at each other, the next minute crude's $15 higher. Like, how would you hedge that? Now, Bloomberg says they have a good hedging program in place. I doubt it at $65. I honestly, I don't know. That doesn't. They always chase. That's the history of the airlines. They always chase energy prices. Southwest used to be the only player that was like had the forethought to hedge in advance. Maybe DALs are different. So I would just say that the two factors to watching this earnings call, energy prices is a big one. It's also that forward demand on the global basis. We already know the United States is packed till people are running around, flying everywhere, paying a lot for it. It'll be an interesting call going forward. The market's a little apprehensive going in, though, based on the selling last week, and but it's only 1 week. We'll see.
Yeah, I think that word recession is going to be the one that, like, if it comes up afterwards, where they've got concerns about it, I think it's going to be very concerning for not just Delta, for many of the airlines and the travel industry. We've seen so much data come out and so much talk of it, especially the panic coming around in the regional banks as well, more job cuts and so forth. The word has to be brought up, I would have thought.
Yeah, it's like overnight recession. We've heard there's a lot of notes on recessions out there. There's also a lot of negative sentiment in the stock market. Oh my gosh. I mean, like, they're just posting negative article after article after article, which has me wonder, is it priced in that we have a negative economy? And could Delta surprise with stronger data? I don't know what their data, what their China exposure is. Like, China's reopening is going through fits and starts, it appears. But I know that we opened the borders to China. Didn't we just recently open the borders? something like for non-COVID
Yeah,
related.
that was about 3 or 4 weeks ago. I think they could bring flights back into the US.
So that could be a forward view, like, all right, we're taking in a lot of flights from China right now. It's like people are coming over here in droves. They're paying up a lot of money for, I don't know, I'm making this up, but they say that, well, that's forward demand. I mean, they still don't have the capacity. I mean, they're buying planes. I don't know. Capacity still remains an issue, which is why they kept raising prices. When capacity sort of gets back in line, they'll have to drop their prices a little bit, but they'll have better revenue. I just don't know where that mix is. It's sort of like General Mills. You go back to them and you say, at what point do they start basically saying, all right, we need to drop our prices so people start buying more goods? Well, what point does Delta drop its prices so people, fill that capacity if they have it?
Well, we'll have to look at Boeing next week, because I know they came out on Friday, said they're ramping up production by mid-year to 38 planes a month.
Yeah.
I don't know how you actually do that. That's wow.
Somebody's buying air. It's been a long time though since any of these people up. I mean, isn't there like a desert full of airplanes just sitting out there in Nevada? They're all like airplane graveyards. There's like tons of them.
I've got the vision of Con Air in my head right now.
Yeah. Nicolas Cage running, jumping off the plane in that white shirt. Anyway,
we love Nick Cage. All right, let's move on to Love It, Like It, Leave It. Very different sort of look this week, because there's not a lot of earnings out until Friday, and we don't want to just focus on banks. So I've picked out some stocks that have events, they're attending events, there were AGMs. So it's a real mixed bag this week. Are you ready for it, Brendan?
Let's go.
All right, first off, Moderna, and they have their 4th annual Vaccines Day on Tuesday.
Aside from the chart direction, I think that'll be a very fascinating day, because I always thought Moderna, if they could cure a lot of these rare diseases with the vaccines, including cancer, I guess that's going to be on the agenda. That would be cool. Well, not just cool, would be very good for society. Anyway, but aside from that, I would leave it. It stopped falling at 140. Not sure where the support was though there, so I would stay. I'd leave it for now.
Okay. Synopsis, SNPS, they have their AGM on Wednesday.
I'd leave it. Ran the resistance at 391. Has some support at 270, so that may keep it range bound for the time being.
Okay, I'm sure you had to look this one up. SAIC, which is Science Applications International Corporation, they have their Investor Day.
I had the SAIC that made me think of, I don't know what it made me think of, but a different company. Anyway, I like it. Very volatile stock though, really, really volatile. It bounced above the 20-week this past week, but there's resistance above.
Okay. Johnson & Johnson, they've been in the news a lot lately. They're speaking at Third Bridge's forum on China's cardiac, wait for it, electrophysiology device event.
I saw a headline that J&J might go bankrupt a couple weeks ago, and it just completely blew my mind, because they were threatening some sort of class action or something. And I'm just like, Johnson & Johnson going bankrupt? Like, what's this world come to? Anyway, it was just a bluff. I would leave it. It broke past the 65-week, but failed in the 20-week above. It's kind of in no man's land, but I would leave it.
Okay. ConocoPhillips, COP, they have their analyst and investor meeting on Wednesday.
So earlier I said the integrators are driving the XLE and the energy markets. Well, Conoco being one of them. Less energy though. Aren't they more in whatever? I like it. It turned with oil, though it left a very huge gap on the weekly chart, which, as I said before, gaps are meant to be filled. So something to be watched, but I like it for now.
And I threw this one in because all of my friends seem to be talking about Formula One at the moment, but FWONA, Formula One Investor. It's a Q&A session on Thursday.
I have plenty of questions. I didn't know these guys existed. I mean, I knew Formula One existed. I didn't know they were a public company. I like it though. Racing seems, sports entertainment in general, outside of baseball, seems to be doing quite well everywhere. Maybe baseball is too. I don't know. It bounced off support, so I like it. It bounced off support at 62. Interestingly, a relationship with Brent oil, as it seems to have a negative correlation to it. So if oil sort of pauses here, Formula One might actually do better, or vice versa. Kind of interesting chart though, but I like it. We'll see where it goes.
All right. Brendan, thank you so much for your time again. Some great insights. But just to go back on a Formula One, I think that was a Liberty Media de-SPAC, I think. I'll have to go back and look.
Oh, that's why I would never notice it before. I mean, auto racing is always huge. I did a study years and years ago. I was sent to a racetrack. See who has a track in New Hampshire. I haven't been there in years. They used to have Formula. They had racing up there, NASCAR, and it's such an interesting crowd. Like they are like gung ho, love their racing. Like Formula One is more European, right? If I'm not mistaken.
They're all around the world. They've actually got a
Oh, they
race
are.
in Las Vegas later this year, which I think will start at like 1 a.m. or something like that.
Oh, really? They're not the Indy cars, though, right? Formula
No,
One's.
no.
It's those like nice looking Porsche type cars or whatever, the old Ferrari type cars.
Ferrari, yep, Ferrari's very big in it.
Yeah, so I mean, it's big over there. I mean, I don't know how they make the curve. I watched one time. And I don't know how they get around the curves. they they go so fast. But it's the people that watch racing, the people that follow racing, the people that go to these tracks are gung ho. Like they love racing. They love the experience. It's like the original tailgate before football really adopted it. I mean, it's a huge experience. Like the one in New Hampshire drew, God, it must have been 50, 70, 100,000 people for each race day. And we're just sitting there asking them questions like, so what do you think of racing? I mean, they just love their racing. They bring their BYOB, they bring the grills. It's a great tailgate. I don't know if Formula One does that sort of thing, because I've never seen a Formula One race, but I know NASCAR does, and their Formula One's chart maybe argues that demand is strong and it's going higher. I don't know. Fenway Sports Group, I think, is invested in Formula One. So I think, I'm not mistaken.
All right, mate. Let's wrap it up for this week. You have a great week, and we'll be talking to you again next Monday.
You too. Everybody have a great week.
Thanks everyone for watching. Until next time, good luck investing.